What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, we have our core list of companies that we're always watching, and this week I've got 8 trade ideas for you towards the end of the video, so stay tuned. Many of these ideas were recommendations from the Discord users. If you want to join the Discord channel, it's completely free and linked down below in the description, along with all of our other free resources. That being said, the market had a very interesting week's worth of price action. We went down, and then it was bought right back up. So the question remains, is the sort of pullback over? Will we see some more sell-side activity? Let's go ahead and dive into some scenarios now. So jumping right into our SPY weekly chart, talking about candlestick structure and location as we always do. Obviously, we have a long-tailed hammer that needs to be discussed, and the most important aspect of it is, of course, that long tail. If we look at more recent hammers, so we have one here, 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 I would argue this has a long enough lower wick, this one, as well as here, here, and even down here. None of those hammers we just sort of pointed out have a lower wick as significant as the one that we saw in this past week of trade. So what am I getting at? We need to give the buyers some serious amount of credit for the work that they did in defending the lows on the week. So although we did go lower, they essentially retraced a majority of the downside move. How much of that move? Well, let's go ahead and just use an eyeball test here and do something like this. Here's the range of the week, and I would say that they closed it just in the upper third of the entire week's range. So that, of course, has to be more bullish than bearish. If the buyers were not going to step up, you would have seen a candle close way down here, and it simply wasn't the case. So where did this all go down? That's the next question. Location, location, location. Of course, if we look at the gap, right, it was right at the top of the unfilled gap on the weekly time frame. What about the highs? If we do something like this, we had back-to-back highs. They're even in value. I would say if this buying momentum really, continues into the earlier parts of the week and we move higher, a retest of that area should break just based on the technical nature of a weak double top like that. The other thing that we have to consider, or that I want to make you aware of, is that we also have an all-time high that was technically set in an extended hours trading session, and those typically do not tend to hold as the true all-time high of any given move. I also want to point out that volatility is certainly in the marketplace. If we just look back, we had 1, 2, 3, 4, 5 weeks worth of price action all retraced in the matter of 1 week, and then we, as we mentioned, closed in the upper third of the entire weekly range. So volatility is here, and I don't necessarily think it's going anywhere anytime fast, so be prepared for some larger ranges. One last thing before we move into daily levels is I want to point out a few trend lines, right? We have one that looks like this, didn't even come close to it. We have one that looks like this, a little bit longer term, didn't really come close to it here. And then the final trend line is this one here, and we did violate it to the downside. However, where did we close? Right back above. So to me, all long-term trend lines are intact, the weekly uptrend is still intact, and this was really no more than a very aggressive pullback. So we need to keep that in mind as we continue to move forward throughout the analysis. So dropping it down to our SPY daily chart to talk about tradable levels into the upcoming week. I think the most ideal way to look at the chart would be to look at this range here. We've clearly had a look above and fail, and now a look below and fail back into the range. In both cases, we've wound up at the target, essentially, the top end or the bottom end of in this case of the look above and fail of the range. So now the question is, do we break out over that 418, or do we do some more battle inside of this range? And again, based on the weekly and what we just talked about, I'm slightly partial to the upside, but I want to keep in the back of my mind that there is still some major divergence between what's going on here in the SPY as well as what's happening in the Qs, which we'll talk about in just a moment. For the upside break of 418, I would be looking for a bump in the road at 420.75 and then really a move to that all-time high as we discussed on the weekly time frame. That's at 422.82. We also mentioned that the true all-time high was set in a pre-market session, which is right up here at 423.59. So we're going to flip that to blue so we know it's not just a random misplaced line, and it's the true all-time high from the pre-market session. Back to the daily, that would be the ultimate upside target, and again, with volatility increased, it's not off the table that we would make a run all the way up to a level like that. That is the most bullish scenario for the upcoming week. Of course, blue sky levels after that. The next most bullish scenario would be further consolidation, in my opinion, in this overall range, because what that would tell us is that the sellers aren't necessarily that strong. Sure, they took us out of the range once, but they couldn't do it again. So sideways and building value up here is definitely a bullish outcome as well, as opposed to pulling back further and down towards that 50 SMA once again. If we remain in the range, I would watch out for the gap to fill underneath Friday's low 413.19 all the way down to about 412.33. Anything after that, 410.50 is still a critical area of support that should be monitored. Beneath that area, should it break, that would be the most bearish outcome for the upcoming week. I would be watching out for the 50 SMA first touch, not a whole lot of emphasis on it since it was already bought up once, but really a rotation to the low of this prior week, which is the top of the gap at 403.38. The reason I wouldn't really expect it to go lower than that is because if we just throw some Fibonacci's on here, look at the confluence of some of these levels, okay? We're going to pop on a clean drawing set and we'll go and grab our Fibonacci tool. We'll go from the low of this move to the high, and we'll go from the low of this move, if we could get a click, to the high. Now look at the confluence between the 38.2 here on the longer term Fibonacci's and the 50% and the 50 SMA and the top of the gap, right? So all of these pieces of support are really supporting, no pun intended, the theory that this was nothing more than a healthy pullback in an overall uptrend, which we mentioned in that weekly analysis. One thing I do want you to keep in mind, though, is the QQQ divergence, which we'll cover now. So I'm leaving the Qs slightly zoomed out so you can see where this trend line is anchored from. So anchor, touch 1, and we just barely got into it there on the low of this past week. But the divergence is much more clear if we zoom in, and again, we'll go to something like a clean drawing set, and the Fibonacci's are already on, right? We've gone from the low of this move to the high and the low of this move to the high. You'll notice that instead of the 38.2 and the 50, we actually got strong closes below the 50 as well as the 61.8, although we have rebounded as it sits right now. So just pointing out the divergence, the pullback in the Qs is not as controlled as what we saw in the S&Ps. If we go back to our sort of default set to talk about some levels, I think the Qs are going to boil down all to this horizontal level at 326.18 and the 50 SMA, which is baked right in there with it as well, okay? So if we move higher, you're just looking for that rotation up to that 334 mark. This would coincide with SPY breaking over 418. After that, you have a fake breakout high in here at 336.54, which I'm sure a lot of longs are trapped in this general area, so I would expect resistance should we retest that 336.54. To the downside, if we get a rollover here, expect chop in this overall range. If the 50 SMA rejects early on in the week, your first support below is here at 322.83, and then the support trend line. After that, I wouldn't really watch for the support trend line to hold, but rather a breakdown to the low of this past week's worth of trade at 315.81 and the small gap to fill down to 314.91. Anything beneath that, and again, it's here, the shoulder support, which we mentioned from the inverted head and shoulders a while back, that should come into play at 310.45. As the chart currently sits, it's kind of a coin toss for me. It's not really showing me its hand, and as it sits at that 50 SMA at this critical juncture, it'll be a wait and see. Do we accept above, in which case go with the move up to 334, or do we roll over, right? And in which case you're looking at the support trend line. And last but not least, we have IWM Russell 2000 and our small caps. And this one continues to just be more of a benchmark for me. I've said this in the past. I don't really trade the options on it, but as it sits, we're just consolidating and building value up here as opposed to pulling back more aggressively through time. If we think about what's happened here, very impressive run, and now we're just finding price acceptance up here. So it's really not that bearish, in my opinion, that we're just chopping around sideways up here. I mean, it's sort of expected after a really large expansion of range, and eventually, again, it's either going to break out or down, and we now have a resistance trend line in place, a support trend line in place. Of course, we did break the short-term one that looked like this, and we're back testing it now. So into the upcoming week, again, I think the 50 SMA will be pivotal. Do we make it there? Do we chop around? As you can see from in the past, that has sort of been the MO for IWM for the past month or two. So keep that in mind. 50 SMA above. Above that, you're looking at 227 the whole dollar, and then the resistance trend line. If it rolls over at the 50 SMA, you're looking for a retest here, 218.87. Call it 219 the whole dollar, and then 215 and support trend line underneath. Overall, this one it's not clear either. Just like like the QQQ, it's smack in the middle of the range, and whenever something is kind of in the middle of a range, as we've discussed in the past, it's a 50-50 shot whether or not it goes higher from here or lower from here. But you have some targets mapped out, and overall, if the IWM is supporting a green day across the entire market, have a little bit more confidence in those names that are in the Qs and SPY as well. Before we go any further, go ahead and hit that thumbs up button if you have not done so already, and consider subscribing to the channel if you've enjoyed the video. I want to be abundantly clear that it's okay to not necessarily know the direction of a stock headed into the upcoming week. In that case, you either wait for a clearer setup to present itself or just trade scalps, right? You're looking at prior day's high, prior day's low, pre-market high, pre-market low, things of that nature. And that's exactly the case here on Apple, right? To me, it would have been ideal to hold that 50 SMA and 126.64 for a bounce that looked like this. That would have been a clean higher low. We would have defended prior market structure. It just would have been a better setup. But as the chart currently sits, we still technically formed a higher low. We've defended the 200 SMA, and now we're closing back above the 50 and that 126.64. Another thing that makes this harder to read is that we had this nice move up, and we've given back more than I would like to see on a healthy pullback. So all things considered, and here, let me add one more in. We just talked about this on IWM, right? When you're in the 50% mark of a range, you sort of have a 50-50 shot that you go higher or you roll over and go lower. And that's exactly the case here on Apple. So all I was going to say was if, slight edge to the bulls maybe, but more neutral on Apple, looking for day trades only. If we can take out Friday's high, I would just trade it up to higher towards 131.17, looking for intraday levels, $1.50. Intraday levels that form, of course, if there's a prior resistance on the day. Anything after that, it would really take a full market rally, but 135 could be on the table as an upside target if everything really gets going to the upside, again, across the entire market. If we roll over, and this is nothing more than a fake break of the 50 SMA, you're looking for a rollover to the support trend line, but probably a flush underneath that 200 SMA to revisit our gap down below from 121.15 to fill down to 120.40. After that, strong shelf of support at 119 and a last-ditch effort here at 116.44. But again, as the chart currently sits, it's not really clear to me. Maybe a slight edge to the bulls now that we've recaptured the 50 as well as the 126.64. So Netflix actually looks more bearish to me than bullish, even though we have cleaner green candles forming down here in our most recent price action. The reason I say that is because we had a prior flush point here at this 493.85 mark. We flushed it, went to our next support as expected, 478.13, and now we're back testing, okay? So to me, it looks like a prime setup to watch for any intraday setups that are bearish and take it short back down towards that 478.13 mark. Now, if we go lower than that, remember that this is also another flush point. Look at all the touches that we've accumulated back here at 478.13. If that were to be revisited, I would expect a flush down to 465.59. To the upside on any sort of miraculous push across Qs and the entire market higher, I would really only be watching for Netflix to come back into the earnings gap down range. So here, and sort of stall out around 514. We have the 200 SMA there, the 50 SMA will be providing resistance as well, and think of anyone who is sort of holding the bag, if you will, who bought the earnings gap down thinking that it had to go higher. And again, if they're trying to get out for break even, you have all this overhead supply looking to become a seller at right around that 514 mark. So not expecting higher than that on the flush, looking at 465 on the downside here in Netflix. So leaving Tesla slightly zoomed out so you can see the origin of this support trend line. So here's the sort of anchor point, touch 1, 2, 3, 4, and now 5 here with the 200 SMA tangled up in it. I want to zoom in a little bit so you can see that we've also printed a hammer candle on Friday's action. So looking for a bit of a dead cat bounce here, a little reprieve from the selling to maybe come up and revisit that 620 mark. Of course, we would have to clear 600, the round psychological number. It was also prior support, so it should act as resistance from the bottom side up now. So 620, and then after that, if we get anything more than a dead cat bounce, we're ultimately looking at the 50 SMA coinciding with 667.53 as an area of resistance after that. To the downside, should this dead cat bounce stall out at 620 and retest the 200 SMA, just like Apple, looking for a sort of break since we are in such close proximity there, and a revisit of the head of this inverted head and shoulders. So something that would look like this, right? That would be all the way down to 540.41. If that breaks, you're looking at 500 psychological after that. One thing I want to point out here is that Tesla has a lot of work to do essentially before it ultimately reverses its downtrend, right? You could draw the downtrend in loosely, something that looks like this. So any bounces here, again, are probably looking for weakness at that resistance trend line since it's been so dominant over the past couple of weeks. Alibaba blessed us with yet another gap on the chart, so more yellow lines here from 215 up to about 219.04. That's if we can take out Thursday's high. And again, with an inside hammer there on Friday, not overly confident in the direction on this one just yet. Again, that would be the upside target, probably looking for resistance then right around 220, because as we know, that was prior support, which should now act as resistance. If we go higher for some miraculous reason, Alibaba's in a clear downtrend as of right now, I'd be looking out for the 50 SMA as a target. We can also draw in a resistance trend line on this, just like we had in Tesla. And again, that's sort of coinciding with the 50 right now. That would be, an area I would start to look for any signs of weakness for a potential rollover on, any bounce if that happens. Okay. So thinking in terms of scenarios here, whenever we're not abundantly clear on the direction of the stock. If we flush Thursday's low, we're sort of in no man's land here. You can see there's some room to move lower to about 197. After that, I would reevaluate and pick out a support from historical price. Moving over to Facebook now. This one, again, sort of like Apple, isn't really clear to me. It's in the middle of an overall range, right? If we do something like this, here's the 50% mark, and we're kind of right at it. We're also back testing a support trend line, which was broken, and we're at the resistance trend line here, right? So there's a number of things that could happen if we roll over. I would be looking for the move back down to the 50 SMA. Technically speaking, we did set a higher low. This is a higher low here from here to here. And if we went to the 50 SMA, it could be a higher low depending on time of week and where the 50 SMA is. If it does something like this, that would be another higher low, preserving the uptrend, but ideally, still not out of the short-term downtrend, right? Of course, this downtrend resistance line would still be intact if we rolled over and did something like that. So downside target, sort of line in the sand for the week, would be here at 297.42. If it does go lower, looking for this prior high, which is around 285. Again, probably not thinking that we go all the way there if we just zoom back in here for a moment. 285, where'd you go? There we are. That would be the ultimate sort of, most bearish case. If it goes higher, and again, if the market goes higher, we break through all this overhead resistance here, you're just trading up towards that 321.75 and then all-time high after that. But as it sits right now, probably looking for day trades out of the gates. Technically, there is a gap above us. We filled a little bit of it, a portion of it, right? So the gap would fill over Friday's high up to about 318.75. Look for that as a potential early on play in the week. So NVIDIA also broke its support trend line and is now back testing, but this one isn't quite yet at the resistance trend line, right? So a number of factors are at play here. We're also at a horizontal level. We could roll over early. We could break out and go to the resistance trend line. Again, this is one of those ones where it's not abundantly clear to me what is going to happen as the chart sits right now. Green continuation candle on Friday would lead me to believe that it wants to go slightly higher and at least revisit the resistance trend line, but I wouldn't hang my hat on that. Again, waiting for pre-market a little bit more information to develop for that specific day of trade. If we go higher than that, the target's here at 591, and after that, of course, at 611.25, which was an extremely choppy area from in here. If you don't believe me, go back and look at some intraday data around the price point. It was just very choppy, a lot of price history around it. It was also a prior high from in here, so it makes sense, right? If we go lower and roll over back beneath the 50 SMA, looking for the flush under 550 to revisit the 200 SMA here, and if we do go lower, again, since we are in technically a short-term downtrend, I would be watching out for this area of support should we, again, continue the rollover, which is quite a ways away, right? So NVIDIA not looking so hot. If it gives up the 200 SMA, there is some room to fall. Keep in mind, earnings on this one are around the corner towards the latter half of the month. Microsoft actually looks slightly more bullish than bearish here, and the reason being, of course, is we had this prior area of congestion, right? All of this consolidation that happened here, and what happened? This is sort of like what we wanted Apple to do, right? We went down to it and found support there and have moved higher since. As the chart currently lies, I would be, sort of doing you short if I did not draw in this resistance trend line, which we are currently at. It's very steep, so it could break sideways through time, but if we do move sideways through time through it and hold on to the support trend line, I would then be favoring longs up towards the highs from in here at 254.25. After that, there is a gap to fill from 256.50. Keep in mind, bump in the road at the bottom of consolidation, 257.59, but it fills up to 260. Quarter. After that, all-time high would be in play. That's the most bullish case here in Microsoft. Again, it does look better than some of the other charts we've seen so far, but if we were to get a rejection, your target first is here on the rebreak of the support trend line to the top end of this balance ultimately, and then if we go lower, I would look out for this area, which acted almost to the T actually, If we just zoom in, or not zoom in, but draw this level a bit here at 237.86, you'll notice that's exactly the low from here. It's also prior resistance from in the consolidation zone. I would really want to see that hold up, but if it goes lower, I'll map out one more for you right around here. I believe that would be close to 232. That would be the area I would, need to see Microsoft hold on to if I were to remain bullish in the long term about this overall pattern. And last but not least, the beast, we have Amazon, which is clearly in a downtrend, and this one looks the most to me like a bear flag, something like this on the back test of its two major moving averages, 50 and 200 SMA. If this were to roll over at the top end of the flag, look for support to come in maybe slightly above that 31.32, but ultimately your flushes here, 3-day lows all lining up at that 31.32. If it breaks, clear room to move lower all the way down to 30.28, and after that we have this 29.50 mark. To the upside, if we can get back above the major moving averages, we would then have to, recapture the support trend line essentially, and I would say the target would have to be here at 33.10 just about, because we had prior support, then turned into resistance after we flushed it. If we go miraculously higher, and again, the Qs and the whole market is pushing, then we're looking at 34.30, but I wouldn't really consider that a viable target into the upcoming week of trade. Before we jump into our trade ideas to wrap up the video, I want you to do me a favor and hit the thumbs up button if you've genuinely appreciated today's analysis. Some days this is much harder to do than others, and today was one of those days where it's been extremely difficult. You can see up here in the top left, it's 5:30 as I'm currently recording. So this video has taken multiple hours to get done, process, edit, all that good stuff. You're probably seeing it closer to 6:30, 7 o'clock. So all that considered, a like would go a long way in letting me know that making these videos is worth my time. First trade idea here is on PayPal, and this one is very similar to Netflix in terms of the look, but in terms of the psychology, it's a little bit different. We have a short-term flush point instead of a historic flush point, which broke, and now it's acting as a pressure cooker top at 246.54. If we get the breakout higher, looking for a day trade up towards that 50 SMA, and potentially towards the top of this little range we had, up at 256.54. If you want to be a swing trader of PayPal, maybe what you do is still look for that 246 break, and you trade up towards that 277.21 with a stop loss underneath our low here. That would have to be, the target to make that risk versus reward worth it. Next up, we have SQ, which is in a very similar space, and I have to give credit where credit is due here. This trade idea comes completely from my cousin, and he was actually a buyer at SQ 200. And I mean, what a perfect entry in terms of this overall balance, right? This is about as risk-friendly as it gets. You buy here, stop loss here, ultimately looking for 250. Anything above that sort of gravy, again, could go all the way up to 280 to the top end of the range. As it currently sits, I still think the swing trade makes the risk versus reward worth it. If you want to day trade it, we also have the 200 SMA below us. I would say that a critical area of resistance that you could use as a first target to the upside is sort of right around here, right? We had prior support there, resistance here, a day trade over Friday's high and clearing Thursday's high would definitely put this 218 into play. Next up, we have our Peloton, and this was a trade idea from in the past, right? We had a head and shoulders, right? So shoulder 1, head and shoulder 2, and now that earnings has passed, I'd be a little bit more comfortable trading this with options. So the play on this is to watch and determine if we get any sort of bearish patterns to form at the back test of the neckline. If we do, you're simply looking for a rollover to come back down into this low, which is right around $80. Anything underneath that, sort of monitor for continuation and adjust and trail your stop loss lower. If it goes higher, of course, don't be bearish on it anymore, and potentially look for longs to retarget the 50 SMA and or 200 SMA after that. Next up, we have BLNK, and this one, as you can tell by the percent change, absolutely phenomenal day there on Friday, coming right into a very critical area of support here, and now here. 200 SMA is there as well. So looking for longs over Friday's high. It's also sort of a bullish engulfing candle. If we zoom in a bit here, you'll notice we have 2-day highs lining up. So longs over that high to revisit this prior area of support, which should now act as resistance at 32.55. Anything above that, looking at resistance, trendline, and 50 SMA. Should it break, probably 40 would be your next target, this most recent pivot high. Next up, we have Costco, and this one is sort of like SPY in a sense, right? If we zoom in here a bit, you'll notice that we had a very choppy 3 days down, and we retraced a majority of that down move, sitting just underneath all-time highs. So if 387.80 goes, just trade this one up towards blue sky territories, $1.50 intraday levels that form. Actually, as a matter of fact, on something over or nearing $400, I'd just be watching for whole dollars and $5 marks, not necessarily those 50-cent marks here in Costco. Next up, we have Love, which is an airline, of course, Southwest. which is the only airline I've ever flown, ironically enough. And what we have here is the break of a resistance trend line, right? Clear as day. Defending the 50 SMA, starting to poke our heads up and above that resistance trend line. If it continues to see price acceptance above instead of dipping back down below, you're looking at retargeting the all-time high essentially up here. Just to put a value to it, right around 64.75. That's the true high from in here. Again, certainly room to run if it's, really does get that acceptance above. Might have a small bump in the road here just to put a value to that area. That's at 63.10. So maybe a little hiccup there, but really some room to run towards that all-time high. Next up, we have Shopify, and this one is sort of a bottom fishing play, almost like what we had in SQ, right? A very historic place of support here, and here, and starting to form some hammers. So if we can sort of get back above that 200 SMA, 50 SMA, looks good for longs to retarget some of these areas of recent highs. So first of all, it would be here. Second of all, it would be in here, up around that 1250 to 1300 mark. Ultimately, you would want to see it hold 1000 on the downside, okay? So 1000 is sort of giving it the wiggle room to potentially move slightly lower, maybe resolve a little bit, do something like this, but ultimately looking for higher in Shopify after defending this historic area of support. Last trade idea is in Bristol Myers Squibb, BMY. And this one, if we just zoom in a little bit here, is a plain and simple pressure cooker top with a gap to fill above. So here's the pressure cooker top, really looking for clearance of 65.25 to fill the gap up to about 65.75. So a 50-cent move available here in Bristol Myers Squibb before we run into any resistance. After that, you're simply monitoring for continuation. So here, and then trail stop higher until our highs here, and of course here. So just to give an idea of what those numbers are, you're looking at 66.40, and then these highs will mark in right around 67, the nice round number. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, again, if this is worth my time, let me know by simply giving the video a thumbs up or leaving a comment down below. It can be as simple as saying, hey, thanks for the video, have a green week. And I'll say something like, hey, thanks for tuning in, you stay green as well. That being said, I wish you all a green trading week, and I hope to see you on the midweek market update on Wednesday.